Welcome to Theo Trade. This is Don Kaufman. Here it is, June 16th, 2017. Yeah, we're doing the Theo Night video here on a Friday evening. With that, let's go ahead and kick it off a little kind of week in review, and then we'll hop into what we can expect not only this next week, but we're going to go through a couple of individual underlyings, some very interesting really developments this trading week. First and foremost, I have pointed this out a number of times in recent weeks, but what you're looking at here is a comparison chart. I think it's a great place to start kind of the this weekend review, is looking literally at the comparison. And first and foremost, what we're looking at over here, and let me zoom out to a kind of a full screen so you can get a little bit of a better feel. First of all, right up here in this line that's in descent, that happens to be the primary product in here, which is the QQQ. Okay, then we come down to the IWM, again color coordinated, and last but not least the spiders, which is right pretty much in line with the IWN. So really all we're looking at over here is the NASDAQ versus the S&P versus the Russell. Okay, complete and utter chaos. This is a 3-month chart. There's no correlation, there's no feel to some of the trade on a day-to-day basis. So for those of you that do trade on an intraday basis, I mean, legitimately, if you're trading on an intraday basis and you're looking at this and shaking your head, there's a lot to shake the head at. We're getting one day where the bonds are up, the markets are up. The next day, the bonds are exploding higher. It doesn't drive the market down. We even had a day where the bonds were exploding higher and the XLF actually rallied a little bit that day. So chaos is ultimately everywhere in the marketplace. There's confusion on a day-to-day basis over here. Standard correlations are breaking down everywhere that we look. And it's this overriding theme of the marketplace. I know everybody's like infatuated today. Are you going to talk about Amazon buying Whole Foods? No, I don't care about where Range Rovers go to die there at Whole Foods, and Amazon so much as I do. I'll come back to Amazon later, right? As I do, though, the broader market and the correlations really starting to kind of break down. So on a 3-month, I want to show this to you. And then I want you to look at it even on a 3-year basis. And on a 3-year basis, and when I say correlations are breaking down, look at the kind of confluence and correlation we trade with. Things trade in relative tandem. Here we sell off, here we sell off, okay? But there is absolutely a convergence upon us. And what that basically means is the NASDAQ is selling off versus the S&P. The IWM is backing off, though, a little bit. And when you're this zoomed out, you have to respect the fact that these products have diverged so much. I mean, this huge wedge has been driven between the products, and now they're ultimately converging back together. And the only time that we see convergence is in the midst of much more extreme throes of volatility. But the question is, at this point, we're starting to see a little bit of convergence. But when we talk about in extreme bouts of volatility, here's the other correlation that's really breaking down. Okay, have you seen the VIX move? Because I haven't. I mean, we had a couple of wild trading days this week. And again, I just took it to a VIX chart, neither here nor there. But you just have to respect the fact the VIX is in the 10 handle. I mean, that's like taking a long nap, all right, when markets are not moving at all. You look at the VIX, and then you almost have to shake your head when you look at the VIX, and then you turn around and you look at the NASDAQ futures. And more specifically, take a look at the NASDAQ futures here. This is just a 30-day 1 hour. And again, it's Mr. Toad's kind of wild ride inside of the NASDAQ. But at this point, has it really proliferated into the S&Ps? So that's the big question you have to ask yourself. Is this just isolated right now, some of the volatility in the NASDAQ? My answer to that is absolutely, without an equivocation, no. We are seeing, some very strange movement inside of the S&Ps. Some things I picked up on literally weeks back. This is just Google, and it happens to be 30-day 1 hour. And I'm not even hiding any of the after hours trade. I can do that. Just come over here, go to equities, turn off after hours, yada, yada, hit apply, hit OK. What I want you to see is how chaotic some of the trade is in Google. You could do the same exact thing inside of Amazon. broken, disconnected, fast trade. This is 30-day, 1 hour. In 1 hour, I mean, look at the damage that's done, rallied back, sold back off over here, right? It's complete differentiation in the tone of trade. Well, the reason I say like, well, you know, the S&Ps are also seeing some of this, I found a couple of stocks that typically don't move, okay, that are having wild movement. One of those happens to be none other than Caterpillar. Ironically, it's to the upside. If you haven't looked at a Caterpillar chart lately, and again, I want to show you areas that I don't think a lot of people are looking at. Caterpillar's exploding right now to the upside. Now, this is not about a valuation argument. Okay, and by the way, if you've seen some recent articles over here, the recent articles have been quantitative trading. Quantitative trading now accounts for 90%. 90% of the volume in the equity markets each and every day. And if you know anything about quantitative trading, the quants, they're not values. They're not value traders. They're not going in there and go like, I'm going to buy Caterpillar because it's the greatest thing I've ever seen. That's not the way it plays out. They're buying Caterpillar because they're just rotating capital, right? They're finding reasons to buy Caterpillar other than, oh, I think it's going to go up, okay? It's a very different genre of trading. So you look at something like Caterpillar, explosive to the upside. By the way, if you did look at Caterpillar over 3 years, this product has actually had declining sales kind of quarter over quarter, but that's all right because it has rallied inside of just over a year. You know, it's up 100+% on a percentage basis here, even year to date. If you want to look at it, let's go show prices percentage in here, and you can kind of zoom out. That's again over 3 years. We'll go back to year to date because again, the point that I want to make is this is not like the latest greatest tech stock over here. It's Caterpillar. Things up almost 15% year to date at this point. All right, another one that really stands out, and this one, it happens to be brought to my attention by none other than Jeff Bierman. You're getting wild rotations of capital into something like Bed Bath & Beyond. And if you haven't looked at Bed Bath & Beyond, first of all, good, because neither else has anybody else inside the last couple of years. Nobody wants anything to do with the retail stocks over here, and I'm not kidding. Bed Bath & Beyond has had a ride from 80, okay, all the way down to 35, and it's again, it's a straight shot to the downside. Nevertheless, all of a sudden, if you hadn't noticed this week, this is like one of the hottest things out there. This is not an earnings announcement. It's just a rotation of capital. So we're seeing some degrees of volatility starting to hit the S&Ps. Odd trade out there, and it's stuff that I picked up in the NASDAQ a couple of weeks ago. This happens to be to the upside, at least at this point. And by the way, there are dozens and dozens of different products that we could obviously point out. We're starting to see some fairly wild trade in. And by the way, yeah, Bed Bath & Beyond, all right, a little bit of the down move today. That's residual from what happened with Whole Foods. But again, you have a stock that just traded from, 34 to 36. This thing has barely had an uptick. Again, in 3 years, it's barely had an uptick. And all of a sudden, we're seeing a wild rotation of capital into it. All right. Here's one uptick over there. Anyway, the point being, again, we are seeing, all right, bouts of volatility inside of the S&P. At this point, though, they're to the upside. So the question kind of looms here. If you're looking at the S&Ps, where are we going, right? That's what everybody wants to know all the time. So for that answer, okay, before I go any further, for that answer, okay, we can look to the S&Ps, we look to the NASDAQ, but I actually want to look at some individual stocks. Shall we look at Costco? Oh, not exactly the beneficiary of the Amazon Whole Foods. By the way, again, if you missed that whole announcement, yeah, Amazon's buying Whole Foods. Neither one of those are my favorite stores out there, but anyway, it is an interesting deal. The one part that really gets me, and I'll come back to our main theme over here in a moment. The one part that really gets me about the Amazon Whole Foods deal is that typically when you go out and buy a company, and they bought Whole Foods pretty much cash, they paid $13.7 billion, but the stock rallied $23. Amazon rallied when they paid almost $14 billion for a company. But if you take the $23 and multiply it by the shares in the float, which is almost 500 million, you do some quick math over there. Yeah, the rally actually made just about more. The rally actually made more than they paid for Whole Foods. yeah, strange things are afoot in the marketplace when your valuation goes up when you're spending money. Think about that for a second, because it's something that not enough people, I think, are talking about. Where, yes, it's a strategic advantage possibly to Amazon, neither here nor there. You just plunked down 14 billion, but what's a few billion amongst Bezos? With that, some areas I think you really need to consider in this coming week. All right, in this coming week, let's take a quick glance at Apple. Apple at this point is absolutely one of the keys to the entire marketplace. Clearly, it's the largest market cap out there, right? We've also had a fast descent from 155 to the 142 handle. Again, in percentage terms, I'm going to show prices percentage, zoom out for just a second. It is, okay, percentage terms over the last 9 months, but you have to respect the move here. Was up 35%, ultimately now only 23%. It's in full-blown corrective territory. Now, I say one of the biggest keys is, of course, going to be Apple. And with all due respect, Apple today was down another 1.4%. And yet the NASDAQ ultimately, regained most of its footing, ended up 0.3% down. The S&Ps were largely unchanged. The reason Apple is so critically important at this point, I think you could make an argument that it's oversold and due for a bounce. If Apple bounces, the NASDAQ is going to explode back up in our faces, okay? Again, Apple holds kind of the keys to the kingdom on this one, and I think you're just going to have to watch it very, very carefully in the days to come. One thing that I will kind of show you that's a bit of a standout inside of Apple is when you start opening up things like option statistics, and its IV percentile is only the 53rd percentile. What that basically means is if you looked at volatility, and volatility goes up and down and up and down and up and down over 52 weeks, at the 50th percentile, right? That's right there at the middle of the road. Now, volatility is not extremely high. Now, you would rather see volatility extremely high. I mean, Apple just fell out of bed and its volatility is only middle of the road. And what that ultimately entails is this stock could get crushed before the volatility really starts to kind of grip hold and the fear starts to grab traders. The other thing is I'd like to see volume really start to pick up inside of Apple to see true capitulation. And I have to tell you, overall, I'm a little indecisive in terms of Apple here, but you better believe I'm going to be watching it tick for tick coming into early next week, because if Apple takes off to the upside, believe me, that's going to be actually the signal for the rally inside of the NASDAQ. However, this is opportunity. The opportunity in this trade, if Apple bounces, we're shorting into it. Okay? If Apple bounces, we're going to look to short into it. I never, ever short into the whole. Now, I already carry multiple positions in Apple. One of the positions I actually carry in Apple, I'm just short. In this particular account, I'm just short 200 shares. I do carry a number of other short share positions roughly at the same price. My average price is about $151.50, and I'm shorting into Apple, and I'm sitting with it at this point. Now, I'm going to look for an options trade. Again, I never short in the whole. What that basically means is this stock came down hard and fast. Shorting at this point, it's like walking into a firefight, right? This thing could explode back up in your face. When it does explode back up in your face, that's actually the time to short it. It's an opportunity, okay? If the stock continues to the downside here, wonderful. It's going to pull the entire NASDAQ and most of the market with it, okay? The other thing you want to consider, all right, to get a feel for the entire marketplace. So Apple can absolutely bounce the NASDAQ. If it does bounce the NASDAQ, we're going to short into it. The other major stock over there, no doubt, look at stuff like Caterpillar. Okay, look at stuff like Caterpillar. This stock starts to roll over. It will be indicative of the entire S&P rolling over. I'm also going to bring up another strange one, Boeing. Of all things to bring up, Don, you're bringing up Boeing? It's in a very, very similar category in my mind to Caterpillar. Again, this is another one that Jeff Bierman had brought me into. And it looks like in today's trade that it actually had kind of a key reversal in the trade today. Boeing comes off, Caterpillar comes off. I think it's very, very indicative of the S&P is about to take a turn for the worse out there. Now, speaking of the S&Ps, Okay. What would our weekend update be without a bond rally? The bonds continue to explode higher over here. You know, you look at this and you think it's inexplicable. The Fed keeps raising rates, but the bonds keep going higher. You have to realize bonds rallying is taking interest rates down. Okay. As interest rates go down, the XLF looks like it's never been better. Okay. The XLF looks like it's never been better, and the interest rates continue, okay, to fly in the face of what the Fed is doing. As they raise rates, again, interest rates are actually backing off. The XLF did massively nothing throughout the course of this week. Okay, important stuff now. The SPX, let's get to it. The SPX and the expected moves. So I'm going to kind of zoom in on the most recent weeks over here. And forgive me here for a second as I try to zoom very, very tightly into this. What you're looking at here in some recent weeks of trade, first of all, this is last week. Last week, we started the week, and I'm going to just kind of draw on the screen here for a moment right here, okay? And right there, that line is equivalency to about 24.32. That's where this past, week pretty much started. That's where we ended last Friday. It's kind of where we started on Monday. So what are we looking at this coming week? Listen, we closed this week exactly where we started it. So pretty much from Monday to Friday, what did the S&Ps do? Massively unchanged. Okay. This next week, we start in the exact previous spot. The expected move in this next week of trade over here, if you go take a look at the SPX, look at the option chain. Don't just take my word for it. Look at the chain, and I'll tell you why you should look at the chain. We're looking at about a $21 expected move. Now, that's on a 7.54 vol. The reason I say don't just take my word for it, you can come back over in here to Think Back. If you're on Thinkorswim, that's fine, neither here nor there. But you can come into something like Think Back, and you can go back weeks and months in trade over here. Go back to any given week inside of Think Back over here. Look at some of the volatilities. Seriously, just take a little bit of time, come back into April, right? You're like, oh yeah, nothing happened in April. So go back and look at April. And in any given week, even when you have like a 6-day week, there was like a 9.5 volatility. Okay. You come to the next week over here, pick any given week, with 7 days, there's a 17 vol. This is the French election. Okay. Yet another week. And I'm just trying to reiterate a point. Here's 7.72 vol with a 20.84 expected move. This was really the only week that I can find, okay, pretty much anywhere in the marketplace where the volatility is as low as it is right now. So the lowest volatility pretty much out there, we're almost spot on it. It's some of the lowest volatility ever recorded. And what's shocking to me about that was some of the lowest volatility ever recorded. We're seeing all of these chaotic signs emerging. And again, the marketplace just shrugs it off. And there's opportunity, again, written all over this on a day-to-day basis. So a $21 expected move takes us up to about $24.54 and down to a range of about $24.11. A very, very tight range for the S&Ps. Let's go to the NASDAQ. All right, and the NASDAQ over here, we will turn our expected moves back on. The NASDAQ, after having a fairly large expected move last week, almost a $4 expected move, just shy of a $4 expected move last week. Well, you know what? The irony of that $4 expected move, and again, I'll kind of box this expected move in. The irony of that $4 expected move, the NASDAQ came down here, not that much. It moved at one point about $2, barely moved to the upside. So what do? They narrow the expected move this coming week. And I say they, it's the marketplace. This is not a conspiracy against you. Okay, I know most people think that, but it's not a conspiracy against you. But the expected move narrows to about $2.74 from $4. So a nice contraction. One of the cool things about looking at the expected moves is you can kind of see like big volatility, small volatility from a week-to-week basis. Just eyeballing these expected moves is incredibly useful to get a feel for it. Remember, I'll leave you with a couple thoughts over here. Remember, in this weekend update, really do want to watch Apple, stock that's been beaten up Okay, if it explodes to the upside, yes, the NASDAQ is going to come up. Short into it. Short into it at this point. I mean, we're in a move that is corrective territory, and the fact that it's only a 50% IV percentile tells me there's very likely to be some more downside. Unfortunately, you don't want to short into the hole. Wait for the bounce, short the bounce. Now, you could be walking into the middle of a firefight in there. That bounce could take us all the way back up to 150. It's okay. Use defined risk. You'll be just fine in that one. The other stocks you want to watch stuff like Caterpillar. Watch stuff like Bed Bath & Beyond. Nobody would touch Bed Bath & Beyond, and all of a sudden, it's the hottest thing on the block over there. Caterpillar, really? Boeing? Okay, look for some key reversals in Caterpillar. Look for some key reversals inside of Boeing. And again, good luck to you guys this next coming week. Thanks for everybody for joining us here on the Weekend Update at TheoTrade. Have a wonderful weekend and a great Father's Day. Bye-bye.